Hey everyone, welcome to the Finquinity's podcast. This week we'll be covering um, a lot of different events coming next week. And starting off with a market recap, the stock market this week has been pretty flat, although QQQ has been hitting some all-time highs. Is that right?
Oh, absolutely. I think QQQ, we saw the market go up around 1%. I think we had 2 days of record highs for NASDAQ. And then S&P 500 has been doing even better with, I believe, 4 out of the 5 days setting record high for the S&P. So it's
Yeah,
been a great week. And
yeah.
the reason behind this such a great week, I think there is only one or couple big catalysts, and we'll get into them for a bit. How has Bitcoin been this week?
Bitcoin's just been chopping, but
Mm-hmm.
there's enough volatility for people to make some trades. So, for example, I personally bought in and out with some call contracts, and I made some posts about it on X as well. So
Mm-hmm.
anyone that has been following those posts, they would know exactly what level to buy it at, right? And you can open up the value the model right now on your screen,
Yeah.
but essentially the post that I made states that let me see, just open it up. Anywhere around anything under 118K is great, but specifically we're looking at the 117.5
Mm-hmm.
$1,000 range
Yeah.
for Bitcoin, because our model basically says that is the strong support line, and based on those trades in the last couple of days or so, Bitcoin has just been bouncing up and down on it.
Oh yeah. So that's been a very very good source for intraday, or even just like a very like 1 to 2 day hold swing
Yeah,
trades.
yeah,
So
yeah,
very good for short term. But on the bigger picture, Bitcoin has been neutral, and I think
yep,
I think the sentiment around that is completely fine. I think
yeah.
it's like
I mean, it's normal, right?
it's
Like you
normal.
want you want price consolidation.
Hmm.
You'd be a little bit afraid if it just ramps up like every day, non-stop, because people will get jittery and they're thinking, how much is too much.
Right.
So it's great that we had some drawdowns even today, right? Like when it like overnight it drew down from 118 all the way to 114.8.
Oh
So
yeah.
that was great because it allowed people to buy some dips, and also it allowed people to enter at those prices. So now you have a lot of new holders at that price, and they're less likely to sell because of that.
Hmm.
They're probably gonna dive in hand this thing, than selling it at any drawdown at this point.
Oh, I think so too. But I think to also add on to it, is just that Bitcoin. The reason why I think it's interesting this week is normally we have Bitcoin leading, um,
Yeah,
the 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 Nasdaq, the technology, and the risk on like assets. But this
yeah,
week, it actually was one of the few weeks where it was delineating.
yeah,
Whereas the market rallied behind the key event of Alphabet,
yeah,
we can see that actually Bitcoin had a breakout from that normal trend of following
yeah,
tech.
yeah, yeah.
Is that
And
normal for Bitcoin? I mean, what do you think? I think I in
that's a
my
great
tip, yeah, in my mind it's not. But I want to hear your thoughts.
that's a great question. I think that there's a really good explanation for this, and it's quite rational. So basically, what we've seen so far is, if we look at Bitcoin, right? Since April, it went from 76,000, and it doubled, essentially almost doubled to
Right.
around 122, and we've been consolidating there. But if you look at QQQ, we've only recently hit new highs. If
Mm-hmm.
you look at the most recent high was around February,
You're right.
so around 530, 536, right?
Yeah.
And right now we're only at 566. So what does that mean? So it means that if we were to draw a
A
a
straight
measurement,
line. Yeah, yeah, like a linear
right?
line, right? Yeah.
Yeah, we're only up like 5%
Mm-hmm.
from the last all-time high before the crash happened. So I think that the reason why QQ is still moving up is because it's still trying to catch up to the growth that it missed throughout most of the year.
Mm-hmm.
And it's catching up to Bitcoin, and Bitcoin has already, gotten so far ahead that it needs to slow down a bit, whereas QQQ is, it has now is catching up, and it has that momentum. um I do think that just on a general basis, QQQ is a little bit overbought. It's hitting oversold signals on our models constantly. Like every 3 days, it's like flagging,
Yeah.
right?
It's once a week, once
So
or twice a week,
yeah,
or once every 2 weeks. Yeah.
exactly. So like, I'm not gonna lie to you, it does raise some eyebrows whenever I trade because I'm just second guessing myself whether or not I should close my call positions
Mm-hmm.
before the dip happens, right? But unsurprisingly, because the volatility is so low, VIX is very bearish right now, very
Mm-hmm.
low. Um, every dip is getting bought, so I feel a little bit more confident that even though we're getting flagged, it's just another excuse to add and size in and make a bigger position. And I'm not super afraid that the market's going to dive.
Oh yeah, I don't think so as well. But next week is going to be a critical week. I think we'll talk a lot more about that later.
Yeah,
But so far things have been good, and the events that have happened this week, which we'll talk about very very soon, um, are also showing that as well. The last thing I want to
yeah,
over recap, I think we touched on before, was the VIX. The VIX
yeah,
has been on a downward trajectory, and this week we got a VIX squeeze in the bear direction. I mean,
yeah,
just look at this VIX. It went from 17 at the start of the week, basically,
yeah,
to almost 14.9, 15.
yeah,
So it's been
yeah.
quite unusual.
It,
A very good
yeah,
sign.
it's also a bearish trend as well right
Hmm.
now, right?
Yeah.
So this bodes really well for risk assets. Now, does that mean it'll continue? I don't know.
Yeah.
When VIX is very low at some point, it can always bounce back, and that's what we have to be prepared for.
Hmm.
So I think that in terms of volatility, I'm not super worried about dips,
Right.
but we should be mindful that the dips will happen because the VIX is so low, and buyers and the market is probably very bullish right now,
It
so they
is.
can get easily caught offside.
Oh, very, very easily. And I think let's talk about why the market kind of has been bullish. In my
Yeah,
mind, there have been, I think, three big events. Um,
yeah,
let's start with maybe the Alphabet, the Google event. And well, Google had their earnings last week. I think they had their earnings on the 23rd, in the middle of the week, and
yeah,
it was great. It was great.
yeah,
Google, not only did they have an increased revenue, they're the biggest source of their increase. 32% of their revenue increase was in their Google Cloud platform, which directly corresponds to their AI infrastructure and AI services. So we're seeing the market saw not only good earnings, we're also seeing that AI is getting the revenue increase that it
yeah,
was promised. Now, is it truly getting as much as what's been invested? That's obviously hard to say. I think that's still a lot more potential as to why or how much we can still get revenue out of. That's why all these AI companies are valued so highly at the moment. Um, Despite this revenue not keeping up or not meeting that potential. But the fact that Google revenue did increase by 32% since last quarter in their GCP, with the large part due to AI, and also AI's continued infrastructure spend in AI, I think the market is very happy with the AI space. We saw, because of Google alone, not only did Google shoot up the next day all the way up to 197, almost 200. We also saw the entire market, Nasdaq as a whole, shift up 1% because of Google. And I
yeah,
think the great thing is, because there are a lot of tech earnings happening in the very near future, and Google is setting the precedent that, hey, AI is really getting you revenue. It really might be worth what the hype is all about. And so
yeah,
because of that, we saw a lot of the tech stocks, like Apple, Microsoft, AMD, NVIDIA, Meta, Microsoft, they all benefit because of this one earning. Um, and I think the companies that benefit the most were obviously NVIDIA and AMD, and then even Broadcom, them being the semiconductors behind the AI hardware. So
mhm.
it's been a great week in that sense, and the good earning is setting a strong precedent for next week.
Yeah. Yeah, no, I'm also really happy to have heard those earnings, especially on Google, right? Because it just adds more fuel to the bullish euphoria that has happened so far. Now, for Tesla, Tesla has not been doing so well, right?
No.
And I'm not super surprised just because the big beautiful bill that was recently passed, like less than a month ago, that bill is unfortunately going to remove some EV tax credits. So Elon Musk himself on the earnings call has admitted that in the next couple of quarters, there's going to be some tough periods because they're not going to sell as many cars. And the market is predicting that through those quarters, Tesla is going to bleed a lot of cash.
To be fair, to give Tesla credit, they did beat the earnings. It was not by much, but they did beat the earnings, and their stock has recovered on Friday. But I would agree in the longer term. I think based on our discussion last week as well, I think
Yeah.
Tesla is going to be something to look forward to in terms of its volatility, with
Yeah.
probably a sort of bearish outlook in the shorter term range, the few months, maybe a year long range.
Yeah, exactly. So, that was a great opportunity, especially for those who are trading leverage Tesla ETF, which is what I kind of did.
Mm-hmm.
I shorted some puts, and those puts really printed because the company rallied around 5 to 6% intraday, and we were able to close some positions at sizable profit. So that was pretty good. And the kind of model kind of told us that Tesla was quite oversold, and there was a huge overreaction.
Right.
Yeah. Now pivoting towards other bullish euphoria news, the market also shot up, not just because the earnings were great on both ends, but there were also some geopolitical news that came out that were quite favorable to the markets. The first one is that the Trump administration announced that there was the US-Japan trade deal that was basically closed. And essentially, the US has agreed to impose a 15% reciprocal tariff, or should I say, only 15% reciprocal tariff on Japanese imports, including cars, which is the most important export that Japan has to the US.
Right.
That was down from 25% that the US exports to, implement on August 1st. So, things are looking better, right? Better. And this is the first deal that Japan, you know, this is the first deal so far that was very important that they made. Japan is the fifth or fourth largest economy, depending on how you're measuring it. And so far, steel and aluminum tariffs are excluded from the agreement. So I'm pretty sure the Japanese feel very grateful. Well, I don't think that's the best word,
I don't think they're
but I
grateful,
think
but I think they're like relieved. They're happy to
they're
accept
relieved.
this. Yeah.
They're happy to accept this, right? They are happy to accept that it's only 15%, and their most important exports is not very threatened at this point, including the steel and aluminum tariffs. In return, Japanese, businesses have promised to invest around $550 billion into U.S. strategic industries. How they would do that within 4 years to please Trump, I don't understand, but they made that promise. And in return, I think the Trump administration was happy that at least something was given in return. Most importantly, the Japanese government has agreed to open its import markets, especially for rice, to U.S. agricultural goods, so that the Japanese market can buy more agricultural goods like rice, corn, and soybean, which is one of the more main exports that the U.S. has. So that's the general detail, and a lot of markets are looking at this and saying, hey, if we can clinch a deal with Japan, which is a infamous enemy for having a big trade surplus with the U.S., then this might bode well for other countries, including the UK, Vietnam, and most importantly, the EU and China. So
it
that was
sets a good precedent, right?
That's right. And then following after that news, I think a couple hours later, the market rallied again because there was rumors coming out that the EU and the US were also close to closing in on a trade deal. So that the details are still murky. We're not really sure what's the details there, but that's just adding more fuel to the bullish euphoria.
I mean, to be very fair, I think the reason why the prices are going up is less so about the details of the trade, but more so about the uncertainty about the deadlines and what is happening geopolitically going down.
That's right.
So
that's right.
This is more of a certainty thing as opposed to a details thing. I think details things, those effects will be seen in the more longer term, especially a year out from now, and there'll be a whole sets of macro and like global news to watch out for eventually.
That's right.
But in the short term, in the next near future, 3 months from now, this is good news, and it's it's pointing us in the right direction, especially with the fears of what will happen to the global trade going down.
So you're right on that part. It seems to the markets that because we have a lot of these important deals coming out, the biggest takeaway here is at least there's certainty in the markets now. Hopefully Trump won't change the terms on Truth Social and
you never know.
Basically, yeah, exactly, right? That you can't really like prevent that, like we know the nature of the president, so things can be subject to change, but at least with an agreement, Trump can declare victory and move on to a different target. And I think that's where the Japanese are relieved. They know that at least they have something that can keep him happy so that he can focus, his attention on a different region, like the EU now, or China, for example. And the markets are liking it. They see that the administration is obviously working hard to deliver these promises, and these deadline extensions is not complete BS, right? It's genuine. They're genuinely using the time extended to actually make progress on these agreements as they announce in their campaign promises.
I mean, a good segue is because we're talking about Trump shifting his focus. Let's talk about a big event that happened last week. It's more like very unfortunate the way the current politics shape out in the market, because we see how one person can have such a great impact on the market, and this is about Trump and Powell. So it's been a quite chaotic week. I think the rumors have always been that Trump has been looking to push Powell out of the chair and put someone in who might favor his policies of raising interest rates.
That's right.
And so on Tuesday in the morning, we had obviously I think that the Powell did talk and hitting in EU. Was it the EU conference? And then that was bearish news. Well, not bearish, but it was like he was saying in highlighting that there might not be a cut for a while once again. And then the second event was Trump talking about wanting to imprison or push out Powell for some charges. Do you know what those charges are?
So essentially what the charges are, and a lot of people think this is kind of BS, is that they're trying to find a legal way to remove him, right?
Right.
And because removing him is unprecedented and also politically unstable and it can cause a lot of reactions in the markets, they're justifying it by looking at the renovation that the Federal Reserve has made in its buildings. And they said, hey, you promised that the cost would only be $2.7 billion, but if you look at the cost, it's around $3.1 billion. So the cost has gone up, right? And they're essentially, if I remember correctly, trying to charge Powell for being responsible for the overcharge. Now, I don't think Congress would support this. This is absurd, and obviously, they're trying to make something that's apolitical political,
right,
to get some points from voters, right? And they're trying to add pressure so that Powell sweats a little bit and lowers interest rates. I don't think Powell will cave in. I genuinely don't think so. I think Powell looks at this and recognizes that because Trump is just playing hot and cold. Sometimes he says he wants to fire him, and then on the same day, a couple hours later, even a couple minutes afterwards, he says he has no interest in firing, right?
Yeah.
So when you're playing good cop, bad cop this much, I think Powell understands that Trump doesn't want to hurt the markets. The biggest takeaway that I have noticed so far is that Trump is afraid of the markets. Anytime the market moves in an unfavorable direction, he tries to find a way or an excuse to pump it back up.
Yeah. That seems to be the pattern. Absolutely.
Right. So that has been the pattern over his entire administration so far since the beginning. First with the fact that every country gets an extension on the tariffs, and then he keeps delaying it every single month, and then he talks about having a deal with China or having a discussion to make a deal with China,
right?
To ease the bond markets.
Yeah.
So all of that has been pro equity. So I don't think he'll just randomly break that pattern now. Is he generating volatility? Absolutely. Like in the last couple of days alone, he has forced QQQ to hit the KRM line on our model. Right. So he is very volatile. But that's actually a great thing for our trades.
Oh yeah.
Because when we look at that, we just size in. When we see that the market is pulling back a little bit, and we know the environment is still very safe.
Oh, absolutely.
Overall, with the fact that the FOMC meeting is happening next week, though, I really don't expect anything to change. I think the market has correctly priced in no cuts, and that's still going to be the case next week.
Absolutely. But I just want to comment something. Charging someone for a 0.4 billion increase in construction price is ridiculous if you consider that for the average skyscraper in every large city, you have multiple year delays and the price is ballooning up 60, 100, sometimes even 200% depending on the context and location.
Exactly.
It's just ridiculous. It's just ridiculous.
Exactly, right? Like there's obviously no teeth to this charge, and anyone responsible, to their voters would basically throw this out the dumpster. They're not gonna, charge someone for that, especially arguably one of the more powerful individuals in the U.S., in institutions, right? So there's that. And then the other thing to understand is that these rate cut decisions isn't decided by one man. This isn't like a monarchy where you have one person deciding everything, right? There's actually a board where 12 people have equal votes, Powell being one of them, where they vote and decide on a consensus whether or not there is a rate cut or a pause on it. So even if you threw him out, you're still gonna have to find a way to throw 6 other people out, or 5, so 6 other people out, and replace them with people who actually are dovish. Mm-hmm. And I find that hard to believe. I genuinely do find that hard to believe, because all of those individuals are also independently selected by someone other than the president.
Yeah. But I think any more talks would just get more political. So I think we should probably leave it there for today.
Yeah. We should probably leave it there.
Yeah. And let's look forwards now. So this week, obviously, we said has been great for NASDAQ. 1% up in the week. Fantastic. Almost percent. Let's talk about next week, because next week is very exciting. You have really 2 big events followed by more data. The 2 big events are like you have earnings, and then as we mentioned before, you have the FOMC alongside key data. Let's start with the earnings. You have 4 big earnings, and obviously there are more, but these are 4 that I think we are tracking, and that's Meta, Microsoft, Amazon, and Apple. We see Meta and Microsoft, their earnings are both going to be on the 30th, July 30th. And then Amazon and Apple are one day after on Thursday. So Wednesday, Thursday are the big days of the week. And I think what these earnings are going to show are going to set the trend. Now, the reason why I think the stocks are moving up the moment they are in NASDAQ is because Google's at a good precedent. So now people are expecting that the earnings from their competitors, Google's competitors in Meta and Apple, are going to show very, very similar results. Especially Amazon and Microsoft too, because Amazon and Microsoft, they're also very big parts of the AI data center and cloud compute game with Microsoft Azure and Amazon, web services and Amazon SageMaker and all that stuff. So I think seeing a good earning here is going to be very good for the market. We can probably expect at that point then for the bullish momentum to continue easily for a month.
That's right.
Up until maybe the NVIDIA earnings, but it's like late August. I think basically I think in my mind, next week's earnings are going to set the tone for the market.
Yeah, no, exactly. I agree with that sentiment. I think that the markets are quite euphoric right now, but they really will run out of fuel if they don't get even more good news. That's what's essentially going to happen.
Now I have a question for you, and that question is, we're going to go back and forth on this. It's going to be, suppose out of the 4 earnings, how many earnings have to be sour, do you think, for the market to turn sour?
That's a great question. I think that, I want to say 1 is enough.
Yeah.
Just because each of these companies are gigantic, right? They're huge. But understanding the relevance of how AI factors into this, I think some companies will be more important than others.
Right.
So, for example, when we're looking at, like Meta, right, who has spending on AI infrastructure or on just like AI
talent,
R&D,
yeah,
on talent.
It's their big data center, right? The Manhattan data center.
Exactly. It's arguably going to have more weight if they say that they're going to spend more on AI, right? Whereas for a company like Apple, for example, where we know AI rollout is very slow right now, and it's not really an AI company yet, even if the earnings are not super great, I don't think it's going to bring the market under, because what we've seen from Google is that the market didn't just go up because Google was great. It went up because Google promised to spend more on AI, and the other companies also went up, and especially the AI and semiconductor companies. So we need that level of broad news in order to fuel this market. If we don't get that, that is when I think the market will run out of fuel and will consolidate, because for the market to now go up, that euphoria has to broaden out from just the Magnificent Sevens. It's no longer just Tesla, Apple, Google, Meta, or NVIDIA, right? These companies have to bring up all the other companies, and we're going to hear that in the earnings. I think that if we hear something like NVIDIA saying, oh, they are expecting even greater demand from their business partners, that's also going to be really bullish, because they expect that other companies are spending more on AI rollout as well.
Right.
But if you don't get that, then I think that's where the news will be bad for the markets, even though they might have beaten the earnings. I don't think the markets are satisfied with just beating the earnings. They want to
hear about the spending, right? How much they're doing in
exactly.
the AI space, the infra space. Yeah.
Exactly, and whether or not it's giving the return at this point.
Exactly.
Because I think I like, as you mentioned, it wasn't just Google doing well that made the market go up. In fact, Google actually went down when the earnings came out. But it was, I think, during the earnings call and the discussions that were out afterwards that reviewed what their plans are and actually how profitable the investments have been. So it's going to be the details, the nitty-gritty inside the report that's going to matter. I don't think that the headline numbers are going to make much of a difference at this point.
Yeah. I mean, I think especially for in the AI space, the actual EPS or like other metrics for earnings, they matter far less. So like revenue matters far less so than like what their plans are for the future. So
that's right.
Very important thing. I think the biggest thing I'm looking forward to is I think Amazon and Microsoft. I want to see if Google is an outlier, or has Microsoft and Amazon also gained significant revenue from their own AI cloud platforms, the data centers. And if they are, I think that's great news, and even more good news for on NVIDIA. Ironically, the fact that you have the tech companies doing well will mean NVIDIA will do well as well. NVIDIA gets like a mini earnings performance boost for all of these earnings.
Every time these other companies are saying we're building out AI, we're rolling out AI, right? And I think that's the beauty of NVIDIA's business. It's all about selling the shovels to dig the gold, rather than actually going out for the gold. you're making the equipment and selling that out.
It's
As
so
long as
intelligent. So intelligent.
you know, it's a very capital efficient way to integrate yourself for the future and also for the present, because no one can escape how influential you are, because you are selling the ingredients for this revolution.
And at the moment, they have a monopoly. Almost
They
a
do.
monopoly. I mean,
They
I
do.
do know that they do have a monopoly in like the data center space. It's ridiculous.
Yeah.
It's ridiculous.
Yeah, they do, right? And no one comes close, right?
Well,
Like
maybe
whenever
not yet. I think we'll get there. I think
Yeah.
there will be competition, but
we'll get there.
yeah, I think in the
Yeah.
near future, there are one monopoly pretty much. So
Exactly, right? They're quite dominant, and everyone likes comparing them with like AMD or even like Intel, right?
Right.
And we've seen from yesterday how Intel is like behaving. So like I don't think NVIDIA has anything to fear, but it shouldn't pull an Intel by resting on its laurels. It should still continue being aggressive, you know, and rolling out products that are not just incremental upgrades, but are fundamental upgrades that can push the boundaries of how far these other companies can go.
I mean, I've been last week for our own fund, our own company.
Yeah.
I've been looking into data centers. I've been looking into all the advancements NVIDIA has made in that compute space, and I have to say, I am quite impressed in how year on year they are almost like doubling their efficiency. It's insane.
Yeah.
It's insane.
Yeah.
So
Yeah.
I am very happy with both the tech side of NVIDIA and also how NVIDIA is reacting to all the earnings and the overall product itself.
Exactly, right? Now, if we can somehow get their price to come down, that'd be great. As a consumer of GPU,
yeah.
I get very frustrated with the fact that they know they're the only game in town, the best game in town, and that's reflecting the prices, right? So that's something that I think may encourage other companies to research their own infrastructure, as that's what I've heard, and you can correct me on that.
Yeah.
But I think that's the biggest takeaway. They have a monopoly, but they won't hold on to it if they're going to be pricing an arm and a leg for these companies. Yeah, because they're going to find a way to cost cut that eventually.
I will slightly push back. I agree overall. There's a very popular GPU called the L4, NVIDIA L4 GPU. This is what you basically need to run the smaller language models. So this is the minimum requirement. If you don't meet this requirement, you cannot run any AI models locally on your computer. And this minimum price, the minimum GPU, I've seen prices as low as 3,000 to 4,000 USD. Now this might sound high, but in the scheme of things, that is a very good price for a GPU, given that like the high-end consumer cards, they're around 2,000. So
right.
I think for someone looking to get into the AI space, like startups or like more AI companies looking to get their foot in the door, a fact that an L4 can be as low as 4,000, 3,000. I would say I think the high point as high as 15,000, but like I would say that the low is more important, is a good sign. And so that people can get started on ideating and creating the products of tomorrow with an L4 at a reasonable price is a good sign. But that's not. I think we should probably pause there, because I could probably go in an NVIDIA rant for another hour or so. So
right. Yeah. Don't worry about that. So I think the next aspect we want to pivot to would be the FOMC in general. We've touched a lot of that already, but that's what's happening next week.
Same day, by the way. Same day, Wednesday 30th. It's gonna be it's gonna be a very crucial day. Very crucial day.
Exactly. So for call holders, you may want to close your positions before then. It's gonna be very volatile and uncertain. Markets are again pricing no rate cuts. It's just gonna be a pause. I think it's a great call to make, just because finally we're seeing prices being reflected in the goods and services that we're getting. We've seen what the report was for CPI last week, right? And
higher than expected.
Inflation, inflation was higher than expected. So if I was Powell, I would see that and I'm like, you know what, that's not concerning right now, but I would like to see more data. I would like to see what's July's and what's August numbers are like,
and more
so
trade
I
deals
can get it back.
and like more.
Exactly.
Yeah.
Right. And I think the biggest news to maybe influence their cautiousness is going to be whether or not there's going to be trade agreements being made, as you said, because that will provide certainty, and these companies will forward project that by potentially lowering their prices back from, post-tariff Liberation Day levels, because they know that there's at least some sort of certainty going on. But that makes no mistake, though, even if you make those deals now, those products will not have their prices being reflected until maybe 8 to 12 months from now, because those products have to be ordered, those products have to be produced, and then shipped from one country to another. That's going to take a long time, so you won't see those prices being reflected now. And I would be surprised if Powell cuts without seeing those prices changing.
Oh, absolutely.
Maybe the deals are enough. Yeah.
Maybe the deals are enough, but I don't think so, because we've only heard back from like a very small fraction of what the number of deals we should be hearing back from in theory.
Exactly.
So
right?
I don't expect any change. I don't think the market expects any change. So if there's a change in either way, it's gonna be quite surprising. Surprising.
And I think the biggest trade deals that would actually provide certainty and encourage rate cuts would be providing trade agreements or completing trade agreements with Canada and Mexico. If we can kind of get that locked down, that'd be great. Just because a majority of U.S. trade is conducted within North America,
right?
So these are your cars, right? Your biggest purchases, your cars, your lumber, your a material used to make machines and your homes and stuff. So the largest purchases are influenced by the material that you source, the labor that you get from Mexico and Canada. So if you can clinch that down, I think you can provide that extra dose of certainty that the Fed needs in order to be more certain that these rate cuts are the way to go.
Yes, 100%.
Yeah.
I think.
Yeah.
But I think here's something interesting. The rate cut might not change. There might be no cut, as what the market expects. But if Powell, makes statements that suggest the rate cut might not happen September or October of this year, that would be a bad news for market as well. So they have to also be lookout for that, for the future rate cut expectation.
It would be, yeah. And right now I'm just gonna pull up TLT to see how that's doing, just see how the bond market.
Yeah, let me do so as well.
Yeah, the bond market. Let's see what we're doing here. The bond market has been just, I guess, chopping. Like it's gone up in the last couple of days.
Yeah.
But it's gone really nowhere though.
It's gone
nowhere. over the last couple months from now to April or so, it's just been chopping.
Yeah.
Right.
Yeah.
So I think the bond market is just seeing this with these agreements, and they're calling the bluff, and they're saying, you know what, we see these agreements, but I don't think it means anything right now, because we're not even sure if these agreements are set in stone.
Yeah, exactly.
Right. So if the bond market isn't set in stone, I have no doubt that the Federal Reserve is also not set in stone as well, because they definitely take a look at the bond market and react accordingly.
Do you think they're going to delay the expectation for rate cuts this year?
I think it depends how bad the inflation is. I think that if their numbers exceed the 3% handle, then I would believe that they would push these rate cuts and delay it. We're already hovering very close. What's our number? 2.7, 2.9?
Right? 2.7. Let's have a look. We can confirm.
I don't remember what the numbers are.
Inflation year to year 2.7. Yeah.
Okay, 2.7. Well, month to month.
Core inflation was 2.9, and then inflation was 2.7.
Okay. Yeah, so they look at core inflation a little bit more. So
right.
So if we see that thing and they're seeing 3%, it's gonna be hard for them to justify rate cuts when the current interest rates are not really putting a dent in that handle and bringing it down. So that's my biggest fear. Hopefully, with these trade deals, the price increase is temporary, and we'll see maybe perhaps some deflation in these key products once trade deals are announced. But I don't think you'll see that price reflected until the products actually arrive on shore, because you have a lot of these companies that have bought up a huge amount of inventory at these inflated prices,
Mm-hmm.
and they have to sell it at those inflated prices
Otherwise,
because you
they'll
can't.
just be making a loss, right? Exactly.
Exactly, right? So there's a lot of companies that are going to be doing that, and it's going to be reflected in the goods and services that is being reported in the data.
It's gonna
So
be
that's
like
my biggest.
lagging by definitely months of lag, even
Yeah,
when the trade deals are locked in, if they are locked in, that is.
exactly, right? So that's my biggest worry. Now, on that point, data that is very important for next week, and I'm going through the data right now. So on Tuesday we have some advanced readings on retail inventory and wholesale inventories. That's not super important.
Mm-hmm.
There's job openings though. That is somewhat important. We also have ADP employment data and GDP readings on Wednesday, with PCE data and core PCE data on Thursday. Finally, wrapping it up on Friday with unemployment rate data. So that's going to be the biggest data, because I think the market wants to see whether or not unemployment is going to be affected by these tariffs. Based on what we've seen last month, I don't think it's going to be really serious, but unemployment takes a while. It moves at a glacial pace.
Mm-hmm.
So we might see more layoffs now. Like I've heard that there are more layoffs from a lot of tech companies.
Yeah,
right?
Yeah. Especially
So maybe
in the
that's
tech
gonna
space.
exactly right. So maybe that may be reflected, but I don't think it's gonna be too impactful for the markets unless we go up higher, way higher than what the market expects.
I mean, let's try to break it down for the viewers. Try to give our predictions, or some rough numbers on it. So
Yeah.
in next week, I think there are three most important days. But the most important day being Wednesday, because we both see the FOMC decision, the conference, and the decision. The conference more important for future rate cut expectations, and then on that same day evening, we're going to see the first earnings of Microsoft and Meta. I think that will
Yeah.
be the first important day to just watch out for. I think for
Yeah.
Fed, as we mentioned, no expectation of changes from what is the status quo. But if there are
Yeah.
changes, it probably would not be good news. I don't think we expect to see favorable news changes. So probably a 80-20%, you could probably say.
Yeah.
Maybe 70-30 if you're more cautious. Thursday is important, but I think less so. I think core PCE, while important, is not as important as the other data this week. And Thursday as well, we see two more earnings, but they should be most likely following suit from Wednesday. So while important, not that important, like tier 2 importance. Yep. And I think Friday is another important day, probably as important as Thursday, because you see the unemployment data. I mean, if the data is neutral, you just see market continue as it is. But if the data is bad, which I don't think we expect, right? What number do you put it on? 60-40, 70-30? What number do you think?
It's kind of hard to tell. I don't really. I'm pretty neutral on these numbers. I don't really have an opinion on that. What do you think? What's your opinion? Yeah.
That's fair. I'm not too sure about unemployment rate. I don't expect it to be past the forecast. Not too much anyway. So
yeah, they're usually very good at forecasting unemployment.
Yeah, I think
because they have a lot of forward data.
It's something that there's a lot of data measure that before the official data release. So
exactly.
I don't expect anything chaotic, but overall, next week is very important. 3 big trading days with lots of events happening.
Yeah, exactly.
If you're a short-term investor, this is your payday. This is the place where you can have lots of volatility, lots of trade.
Lots of volatility. Yeah.
I think for medium-term investors, maybe if you're looking to invest now, maybe be very cautious. It's going to be a risk next week to invest. But if you invest and you are right, you are going to have a pretty substantial return. And for the long-term traders, I think if you're already invested, I don't think we had any signs to really pull out of your investment. I think it's probably good to stay in, because overall we're still in the euphoria. The events next week have a chance but not a substantial chance, for a reversal.
Yeah.
So overall, I think long-term traders, you're happy to stay in your positions as you are.
Yeah, that's right. Yeah, so I think in terms of general forecasts, markets remain bullish, and will continue doing so if these data come out as well. And the biggest headlines like earnings, I don't think will make a dent to the euphoria. But if the forecast, the forward guidance with these companies not spending as much or lowering their costs on AI rollout, that will influence the market more so than the headline numbers.
Right.
So that's my forecast for next week. If you're a long holder, just continue holding. The VIX is in bearish trend.
Yeah.
Markets are very bullish. I'm not too worried here.
Yeah. For the short-term
Yeah.
investors, let's try our best to capture the volatility,
That's
capture
right.
our alpha from the beta.
Yeah. And I think that's it, isn't it?
Yeah. I think that
All right.
sums up this week's podcast. Thank you
Okay.
so much for listening. If you have any questions, comment, feedback, please feel free to leave them in the comment and description, or reach out to us via our Twitter. What's our Twitter, my friend?
Our Twitter is Finquinity, so we can kind of put the link in the description when we upload the video. But this is our X account. We've been kind of making some posts over the last week or so, and trying to make out plays for anyone who is willing to pay attention to the posts that we're making.
All right, that's gonna be it for us. Thank you so much for watching, and have a great weekend. Bye bye.
Yep, and we'll see you next week. Bye bye.